And good evening, everyone, and welcome for the quarterly conference call for Ahluwalia. We have with us from the management, Mr. Shobhit Uppal. I hand it over to you, sir, for the introductory remarks, and then we'll do Q&A. Over to you, sir.
Thanks, Jaspreet. Good evening, everybody. Welcome to the conference call for the release of our Q3 numbers. Ahluwalia Contracts India Limited has announced the financial results for Q3FY18. During Q3FY18, the company has achieved a turnover of 361.07 crores and a PAT of 29.16 crores, in comparison to a turnover of 358 crores and a PAT of 24.39 crores in Q3, the corresponding quarter of FY17. The company has achieved a growth of year-on-year basis of 1% in revenue and 20% in PAT. EPS of the company for Q3 FY18 is 4.35 as compared to 3.64 in the corresponding quarter of last year. During Q3 FY18, the company's EBITDA margin is 17.30% as compared to 13.17% and a PAT margin of 8.07% as compared to 6.81% in the corresponding period of the last year. During the 9 months of FY18, the company has achieved a turnover of 1199.81 crores and a PAT of 84.44 crores, in comparison to a turnover of 954 crores and a PAT of 66.19 crores in the 9 months of the last year, which is FY17. The company has achieved a year-on-year growth of 26% in revenue and 28% in PAT. EPS of the company for the 9 months FY18 is 12.61 as compared to 9.88 in the 9 months of FY17. During the 9 months of FY18, the company's EBITDA margin is 13.83% and a PAT margin of 7.04%. Net order book of the company as on 31st December 2017 was 3575 crores, which is to be executed in the next 2.5 years. So we are ready to take questions now.
Would you like to take questions now, sir?
Yes.
Yeah. Thank you very much. We would now begin the question and answer session. Anyone who wishes to ask a question may press star and then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait a few moments while the question queue assembles. Please press star and 1 to ask a question. We have the first question from the line of Dhruv Agarwal from Cressida. Please go ahead.
Yeah, good afternoon, sir. Congratulations on a good set of numbers.
Thank you.
If you can tell me what is the status of your L1 orders? Do you have any orders in L1?
At the moment, no.
At the moment, no. Okay. And what is your bidding pipeline, sir? Have you bidded for any projects in the recent 3 to 6 months' time?
Yes, we have. In fact, the bidding intensity has increased. So the pipeline stands at about 2,500 crores.
2,500 crores. And how do
it includes what we bid and what actually is under bidding over the next 1 month.
Over the next 1 month, right?
Yeah.
Okay. And sir, if you see, what are the status of your legacy orders? Any stuck orders from the past?
Yeah, but that's a minuscule number now. It's about 200 crores.
200 crores, correct?
Yeah.
Okay. And sir, if I see for the 9 months, you have already posted a revenue growth of about 26%. So do you see the FY18 top line at around 1,750 or 1,800 crores with a margin of 13 to 14% range?
We had given a projection of about a growth of about 15 to 20%. We're maintaining that at the moment. And we are also maintaining the projection of 13 to 14% EBITDA margin.
Okay, your top line you said 15%, right?
Yeah.
Okay. Okay. Thank you so much.
Maybe about 1,650 crores.
Okay.
Around 1,700 crores.
That's great. Thank you so much, sir. Thank you.
Thank you.
Thank you very much. We have the next question from the line of Chiranjit Singh from B&K Securities. Please go ahead.
Hello, sir. Thanks for the opportunity. So this growth in the top line this quarter has been muted while we have delivered a very strong EBITDA margin. So can you please help us understand, like, was there any, push out which is happening to Q4 on the execution and what led to such strong margin?
Look, the margins are as a result of continuous belt tightening exercise. As I had mentioned during my last con call and my various interactions with a few of you, we are seeing increased competitive intensity. So to counter that, there are continuous belt tightening exercises that we are doing, and the margins are a result of that. Additionally, the growth, top line growth, historically, the fourth quarter is the maximum. It shows the highest revenue. So that is why we are extremely confident that we will cross our year-on-year growth target of about 15 to 20%.
Okay, sir. And so you talked about this 2,500 crores bid pipeline. Can you give us some more color on this, in terms of, how many government projects or, are there any private projects also we are targeting, and what will be the average size of these orders?
So, about 80% of this is government, comprising of, projects which are being tendered out by NBCC, by CPWD, or HSCC, state PWD, and the private prospective orders come from our existing clients like Brookfield, Emaar MGF, also a slew of other developers. We are seeing increased activity on the commercial side. So there seems to be revival in the metros on that. So that is where the private tendering is coming from.
Okay, sir. And so the last question would be on what is our debt levels right now in cash. And we had, highlighted that we'll be reducing the debt levels further going forward. If you can just give us more update on that.
Debt level is right now 61 crores.
Pardon, sir?
61 crores.
Okay.
And what we had projected or said earlier that, we will get it down to about 25-30 crores by 2019.
Okay, sir. Fine, sir. And just if I can squeeze in one more question on the working capital cycle. So how is the working capital, sir, behaved by the end of, Q3, and how we see going forward?
It's 8% the working capital days is approximately 90 days. FY19, approximately 75 to 80 days.
In FY19 we are expecting?
Yeah, 75 to 80. They are down 10 days approximately.
Okay, fine. Thank you, sir. That's all from my side, yeah.
Thank you very much. We have the next question from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Good evening.
Good evening, Nitin.
Sir, the first question is that when we look at the kind of orders which are coming in terms of sizes, especially from AIMS or let's say the HSCC, it has increased a little bit in terms of sizes. We're seeing 700 crore, 800 crore kind of tenders. Just wanted to ask you that are we alone we'll be able to qualify for these orders, or is there a plan B that if the size of the country in terms of ordering is increasing, so we might do a JV and then go ahead? Just want a perspective on that.
So we are following both routes. We have just bid for two orders of NBCC. One was in excess of 1,000 crores where we had a JV with a Russian company. And the second was sub 1,000 crore level, which was about 850 crores, where we qualified on our own.
For NBC.
So with minor differences, I think the qualification criteria of different nodal agencies is more or less similar. Minor differences are there. So depending on which agency is calling the bid, we will follow a strategy, or we will have to follow one of these two routes. But we are following both as per the example which I just gave you.
And when you say that you get a JV, is just the royalty we is going to take away, or is it like a profit share kind of a JV we'll be doing it?
That again depends on the type of project, on the type of joint venture partner. It can be both. They can be participating in the actual execution of the job. We are now going to bid for a couple of airport tenders which have come out, where our potential JV partner will be participating in the execution. Or there can be the other way can be they provide technology as we had done in the past with another Russian company for precast. The third can be that they can participate in the profits.
And sir, we have seen, a lot of the companies, let's say for example, who are focused on roads, finally going towards railways, again going towards metros, metro projects. Yeah, so as you mentioned, the airport that you're going to bid, is there some other diversification also we are looking? So for example, you name a player called Brookfield. Is there a thought process, because he's got good amount of funds in India, is there a thought process that we're going to increase the private, also the share in the order book, if it is in a particular state, for example, where RERA is good and stuff like that?
Yes, Nitin, that I've always maintained that in the long run we would like to maintain an equitable balance between private and public. So last conference call also I told you that now it stands at about 60-40, right? So we see a revival happening in the private sector, especially on the commercial side. So over the next couple of years, we'd like to make it 50-50.
And sir, how much this airport tender size would be, which we are participating?
About 1,000 crores.
And will be in JV?
Yes. We do not qualify on our own.
Got it. Sir, sorry to press you on this question of margins. I mean, this is something, a very historical high margins we have made in this quarter. If we are confident, and so why don't we revise our guidance upwards? So you think there was some synergies, or let's say a provision right back came in this quarter, that's why the margins went higher? Just wanted to ask you a little bit on that.
So yeah, it's not that we will be achieving such high consistent margins every quarter. Plus the industry continues to be in a bit of a flux on account of the competitive intensity. And the other thing is that, the government has just come out with a budget, the effect of which is still not very clear. The fiscal deficit is also on the rise. So keeping all these factors in mind, I don't think it is prudent for us to revise our guidelines as things stand. And in this quarter, we've had good progress on 2 or 3 high margin projects. A couple of them in the government sector, one in the private sector. That has also driven the margins up.
What was the order inflow, sir, in this quarter?
Our total inflow in the year, in the 9 months, is about 1,260 crores.
And this quarter is 705 crores.
Yeah, in this quarter it's 705 crores.
As a last question, can you give me the quota revenue, EBITDA and depreciation for 9 months and for this quarter?
This is 9 months revenue, 85 lakhs, and basically the accounting loss is 8.18 crore.
Sorry?
8.18 crore.
6.18 crore losses.
8.18 crore.
Accounting loss.
Accounting loss. But if you see cash loss is around 1.44 crore.
1.44 crores. 9 months, right?
Yeah, 9 months.
Thank you very much, sir, and all the best.
Thank you.
Thank you very much. We have the next question from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Good evening, sir. Thanks for taking my question. So just 2 questions from my side. So on the order inflow, you mentioned that in Q3 we reported around 705 crores of orders. So does this not include the order that we won from Calcutta and also the one in Noida, which were announced in the month of January?
No, we are including.
So including the...
of January, so they are a part of the third quarter.
Okay, so the total order book of 3575 crores also includes those two orders, right?
Yes, it does. It does.
Okay, sure. And lastly, sir, any update? Okay, so just one more question, maybe a bookkeeping question. The interest expense in this quarter showed a sharp jump. So any specific reason for that, and how do we see it going forward?
That's the one-time provision has been made for the interest during this quarter on the systems of the auditor. And this is one time, we are not looking for further provision in the interest.
So how much would that provision would be?
No, this is on account, this provision, this is about 8 crores. This is on account of the DVAT demand which is being raised on us.
Okay.
The interest component of which is 8.7 crores. So this is a provision which has been made for that.
So there is no cash outflow per se?
Not at the moment, no. And this is one time. This will not be there in the subsequent quarters.
Fair enough.
Next year is a 14 to 16 crores.
Okay. Great, sir. So my last question is, did we hear any update on the issue of the investment in Delight Marketing Private Limited, in which CBI had filed the charge sheet? So any update that we've heard from them, anything that is there that we need to know about?
Nothing at all. I think, as I had mentioned last time, I had given the explanation, we were not even on the list of accused. They had asked us some questions, and that those were answered, and that's done and dusted.
Okay. And sir, as we are given to understand, I think they filed a charge sheet in that, so there's no query or there is no name that we have been informed about, right?
That's what I said. We were not on the list of accused, and the charge sheet also, our name is not there.
Sure, sir. Great, sir. Thanks for answering my questions, and I wish you all the best.
Thank you.
Thank you very much. We have the next question from the line of Parvez Akhtar from Edelweiss. Please go ahead.
Hi, good afternoon, sir, and congratulations on a good set of numbers.
Thanks, Parvez. Thank you.
So first question, like the previous quarter, has there been any impact of GST on our revenues this quarter? In terms of YOY comparison, I mean.
Yes, it has been there, yes. So our numbers, our top line has come down by about 8%.
So let's say adjusting for that, what would have been the kind of top line growth that we would have seen?
So it's about 9 to 10%.
Okay, sure. Sir, I missed the order book number, that is 3575 crore.
Yes.
Okay.
3575 crores.
So we have already done about 1260 crores of order intake in this year. For Q4 and for next fiscal, which is FY19, what is the kind of order inflows that we are targeting?
So for the next fiscal, it's about 1600 crores. Our target for this year was 1300 crores, which we pretty much met. For the last quarter, maybe another 200 crores. That's our target.
And sir, just a couple of bookkeeping questions. If you could give us a segment-wise breakup of the order book.
This is basically commercial. This is 8.42%, and hospital 19.27%, institutional 32.53%, and residential private 19.41%, and residential government is 11.04%.
What would be our average cost of debt currently?
This is 9 to 9.5%.
Sure, sir. Thanks. That's it from my side, and all the best for future.
Thank you.
Thank you very much. Ladies and gentlemen, as a reminder, if you would like to ask a question, please press star and then 1 on your touchtone telephone. Press star and 1 to ask a question. We have the next question from the line of Amber Singhania from Asian Markets. Please go ahead.
Hi, sir. Thanks for taking my question.
Hi, Amber.
So just wanted to understand, I believe there is a couple of good institutional orders which are there in the pipeline, which is IIT Hyderabad, roughly around 1500 odd crore, IIT Ahmedabad, which is planned around 500 odd crore, as well as IIM Ahmedabad extension and all. So could you give some idea about, are we also keen to bid for these kind of projects? Will we be able to bid on our own for these? And also apart from this, is there any other large project if you can highlight which are there in the bidding pipeline for next 6 months or so?
Yeah, so, some of these orders we're bidding for. IIT Hyderabad, we're not bidding because that geography we are not present in at the moment, and we don't really have any interest going there as things stand today. But we have executed work on a couple of IITs in the past. We are doing IIM Rohtak at the moment. So yes, these institutional orders are or projects are our forte. So we are going to be bidding for some of them, and yes, we will be bidding on our own.
So given the current guidance of around 1,600 odd crore rupees, are we comfortable with this kind of inflow to report a 20% kind of top line growth going forward, or would we be looking for a much larger inflow going forward on that part? What is our comfort
Not
level?
at the moment, as I'm saying, the competitive intensity is extremely high. We don't want to, follow what some of our other peers are doing. So that is why we are not overly aggressive. That is why we are maintaining our guidance of 15 to 20% growth. We are waiting and watching, because as I mentioned last time around, the number of tenders which are coming out is increasing. It will increase further as we come closer to the general elections. So I think we can afford to wait. Okay. Rather than, reduce our margins or price our bids lower.
Okay. And sir, lastly, if you can just give some idea or some color about the competitive intensity, what kind of pressure we are seeing in the market for maybe for us and for the other players also, how many number of players has gone up in the large space as such, if you can just give some color how things are panning out on that.
So what's happened is, say, a year and a half ago, if you had 4 to 5 bids on a largish project, now you're having more than double the bids. You have a number of regional players who are now venturing out, harboring national ambitions. But what's happening is that the bid pricing has come down by nearly 10 to 12%. These are companies who have not really gone through a downturn cycle. They're comparatively newer players for large buildings. So they are the ones who are bidding extremely low. I feel the numbers should stabilize in the next 6 to 9 months.
Okay, fine. Thank you, sir. That's all from my side.
Thank you.
Thank you very much. Ladies and gentlemen, if you'd like to ask a question, please press star and then 1 on your touchtone telephone. We have the next question from the line of Bharat from Quest Investments. Please go ahead.
Yes, sir. Congratulations on good set of numbers.
Thanks, Bharat.
Sir, on these one or two questions just on accounting, bookkeeping, then we can. This 3575 order book, which is it now adjusted for the GST or it's including full tax amount?
It's including the full tax amount.
Okay. And now, when we say that, sir, this 2,500 crore pipeline, out of that, around almost 1,500 crore is for these two projects, which is of large nature, correct? Is my understanding correct?
Yes.
Okay. On private side, sir, when we say that does not include, which I believe based on the relationship and negotiation it goes, so those are the separate thing, and how much is that opportunity in that case?
So that opportunity is about 400 to 500 crores.
Okay, and that's mostly in the North India or again, and are we looking for, say, South India as a geography?
At the moment, no.
Okay, and this is for particularly North India only?
North and East.
North and East. Okay. And sir, so this quarter, of course, this 17% EBITDA, I rightly said, but overall margin trajectory over a period with the top line increasing. So how do we really see the margin trajectory?
So we see it at about 14%, as I said, as I said, the competitive intensity is high. So we are waiting and watching. We are not going overboard with our bids, but we are confident we can maintain the margin of about 14%.
Sir, one more question, if I can squeeze in. Now, I mean, we are going for more of a composite nature of the project rather than building a shell. So in that margin, what kind of a profitability is, I mean, vis-a-vis shell? Building, I mean, constructing the only shell.
So we've been able to maintain our margins because of the fact that Ahluwalia is a true EPC company. We have in-house verticals. That helps us vis-a-vis our other competitors.
Okay, thank you. That's all, sir. Wish you all the best.
Thank you.
Thank you very much. We have the next question from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hi, sir. Congrats on good set of numbers.
Thank you.
Sir, any update on the inventory, real estate inventory monetization?
ARKISHIT.
Pardon?
Any update on the monetization of the real estate inventory which we are holding?
At the moment, no. Update is that at the moment we continue to hold it. So we are waiting, but we maybe 6 months down the line we will start liquidating it or monetizing it.
And secondly, you said that the top line is lower because of GST impact by 8 to 9%. So this means, I mean, you implied that it's net of the revenues are net of GST. That's why, or?
Yes. Yes.
So you're comparing YOY. So last year it was not there. This year it is there. So that's why you're saying.
Yes. Yes.
Not really. So the GST impact as such on the labor side, labor supply issues, that has, I mean, that's not all behind us, right?
Yes.
Okay. Thank you, sir. That's all from me.
Thank you.
Thank you very much. Ladies and gentlemen, if you'd like to ask a question, please press star and 1 on your touchtone telephone. We have the next question from the line of Parvez Akhtar from Edelweiss. Please go ahead.
Thanks for taking my follow-up question, sir. So you have said that commercial real estate obviously is doing well, especially with the entry of the financial institutions. But how do you see the residential real estate market, and what are your thoughts on taking orders from that segment?
What we are again seeing, there is some movement which is happening there. Post-RERA, especially in Gurgaon and Mumbai, and even in, say, a metro like Calcutta, we are seeing some movement on the ground there. And some tenders have started coming to us. So, over the next quarter, I don't see many projects coming to us. But I think after 6 or 9 months, because we are also doing our due diligence carefully. So over the next 6 to 9 months, we feel that maybe about 10% of the new orders which come in can be from the residential side, private side.
Sure, sir. Thanks. That's it from my side.
Thank you very much. We have the next question from the line of Mr. Utsav Mehta from Ambit Capital. Please go ahead.
Hi, good afternoon, sir.
Hi, Utsav.
Hi. So just wanted to delve a bit on the order inflow guidance. I mean, earlier today, NBCC on the call sort of gave a very big pipeline in terms of tendering. They're saying more than 10,000 crores worth of tenders over the next 6 to 7 months. So just wanted to understand why our guidance is probably range bound in that 15 to 1600 range.
So, NBCC, today, the competitive intensity, what we are seeing amongst various nodal agencies, it's the maximum in NBCC. We see a number of regional players coming in bidding, and they are bidding extremely indiscriminately. So we are, while we are also bidding, but we are extremely wary of of dropping our pricing there. More so, these are EPC contracts. Now, almost 100% of the tenders that are coming out from NBCC, they are EPC lump sum contracts, which require a lot of experience to bid, to calculate, cost out, quantify, and then bid. We feel a lot of bidders who are bidding are inexperienced and they will burn their fingers. So that's why over the short term, NBCC, we are not expecting many orders. That's why our new order inflow, this thing is conservative. Guidance is conservative.
So, I mean, given the fact that these order sizes themselves are 800 to 1,000 crores, doesn't that, and this is significantly larger than what you've seen in the past, so doesn't that itself act as an entry barrier for some of these smaller regional players?
They have diluted the qualification criteria.
Both on the technical and the financial side?
Yes.
Okay,
so they have done that in their wisdom to broad-base the number of bidders who bid on a project. But the jury is still out on whether a lot of them will be able to complete the projects that they have undertaken. We are already seeing large delays on the Kidwai Nagar project.
Okay. I mean, pardon my ignorance, but if you could just give one example of how they've diluted the sort of requirements, just to give a sense.
So they've diluted, a key component on the technical side is similar projects, right? So there the definition of similar projects has been diluted. It's become a little more broad-based.
Okay, that was my question. The other questions have been answered. Congratulations on a great quarter. Thank you so much.
Thank you very much. Ladies and gentlemen, if you'd like to ask a question, please press star and then 1 on your touchtone telephone. We have the next question from the line of Charanjit Singh from B&K Securities. Please go ahead.
Sir, thanks for taking my follow-up question. Sir, again, coming back to this point of, smaller regional players, now there are also, the other criteria like net worth criteria and, the track record in terms of executing those kind of projects. So those, have been also diluted or, and who are these, regional players? What could be the size, what they would have executed? If you can give some more color on that.
So, as I said, there are players like Kunal Infrastructure, Girdhari Lal, Sam India, Swadeshi Construction. There are a whole lot of them. As I said, now on every tender, there are bids ranging from about 8 to 15 people. And I already did mention how the technical criteria has been reduced. As far as the financial criteria which you are asking about, the turnover levels have been reduced, the net worth levels have been reduced.
Okay. And so the thing is that this is only happening in NBCC tenders, or you see like in the CPWD and the other tenders also the similar kind of, dilution of the norms?
Not to the extent that it is there in NBCC.
Okay. So
I think what NBCC seems to be doing, if I may clarify this further for everybody, is that obviously because their order pipeline is so huge, they also realize, and rightly so, that they need to have a bank of contractors, who can execute and deliver. So obviously they cannot just depend on 4 or 5. So that's why I said in the short term there will be more contractors, but the pedigree of these contractors will be proven over a period of time, and hence I see that for the next 6 months, 9 months or a year, the competitive intensity will be more.
Okay. And sir, because you had earlier mentioned that some of the organizations like HSCC, they don't give out discounts, the advance. So there, I think the competitive intensity will continue to remain low. So if we have to, talk about...
Yeah, again, that's a very valid point. We've just bid for two large, when I say about 600, 700 crore jobs for HSCC, where we see only 4 players who have managed to, or who have bid because only 4 or 5 will qualify. There the qualification criteria has not been diluted. And yes, the point is that the advance is not there in those tenders. So that is why some of these smaller or regional players have not found it attractive to bid for these jobs.
Mm-hmm. So how large could be the pipeline for HSCC, sir?
HSCC, the pipeline is about 1,000 crores, I think.
Okay. Fine, sir. So thanks a lot for taking my question. That's all from my side.
Thank you. I'm sorry, the pipeline, when I mentioned, that was our pipeline. What we see, HSCC's total pipeline should be about, I think, 5,000 crores.
And so over what time frame which you have an idea in terms of how they will be ordering out? Like 1 year or 2 years time frame, this 5,000 crores?
I think about 2 to 3 years.
2 to 3.
HSCC, as you also know, the government has come out with tenders for the likes of NBCC or other government entities to take over HSCC. That's why that is also a process which is happening, which should take about a year, year and a half.
But sir, could that impact the ordering from HSCC? Like if
I don't think so. I think it will be pretty seamless. The way what I know of that is that HSCC will maintain its identity. They will become a subsidiary of, say, another organization like maybe NBCC.
Okay. And so just last question on the commercial side. Do you see that commercial real estate also, where we are seeing some green shoots, the intensity is so high like we are seeing in the government tenders?
No, intensity is much lesser.
Okay. Fine, sir. Thank you, sir. That's all from my side, yeah.
Thank you.
Thank you very much. Ladies and gentlemen, if you'd like to ask a question, please press star and then 1 on your touchtone telephone. We have the next question from the line of Gurpreet Arora from Quest Investments. Please go ahead.
Yeah, hi. Thank you for the opportunity.
Hi.
Could you just update, with respect to GST, have we done the repricing of our existing contracts? Has that concluded?
Not 100%. We expect that it will be done by the end of this quarter. It's happening with various clients. With some it's been concluded, with some it is yet to be concluded.
Okay, but for majority of contracts, is it concluded? Any sense on that?
Yes, about half of the 50% of the contracts it's concluded.
Okay, and as in the previous call, you had suggested 2 to 4% is what the client is withholding for the GST till the GST clarity emerges. So is that the amount we are still working with, or has it risen or fallen?
No, it's not risen further. In fact, it's come down. With the resolution of contracts, that's why the overall number has come down.
Okay. My second question was more pertaining with respect to the number of sites which we are executing currently. Could you help us? How many sites are we executing currently?
Project is 40.
Sorry?
Project-wise or amount-wise?
Yeah, project-wise. Number of sites where the work is going on currently.
40 project.
54.
40.
Okay. And Shobit, I wanted to check with you, given the current strength of our man and machinery, how many projects in one go can we execute? If we don't...
at one time, so how do I answer that? At one time, we were handling projects which in excess of 70 odd numbers. But obviously, the scale of the projects is also increasing. So we can handle about 50 projects.
Okay.
If you want a number-wise guidance.
Just an indication. So that's a good enough indication.
Yeah.
So, and last question on this was, assuming the competitive intensity subsides as per your expectations few months down the line, so what is the upper limit for a order inflow which you can have in a particular year, beyond which you would think it's literally impossible for you to add on more?
So anywhere between 2,000 to 2,500 crores.
Sure, that's helpful.
Hypothetically speaking, as you said, maybe a year down the line when the intensity is lesser.
That's helpful. This is for now. Thank you and all the best.
Thank you.
Thank you very much. Ladies and gentlemen, if you'd like to ask a question, please press star and then 0 on your touchtone telephone. Star 1 on your touchtone telephone. We have the next question from the line of Divyata from Systematic Shares.
Yeah, good evening, sir. My question pertained to the average ticket size, which has been increasing gradually. What would be the composition of own execution vis-a-vis outsource or subcontracting going ahead?
So, yeah, our subcontracting on average size project should be about 15 to 20%.
Okay, so that would be applicable for the current order book as well as for the order inflow guidance that we are looking at?
Yes.
Okay, and in that light, what kind of capex can we do on a standalone basis for this year and next year?
This year is approximately 20 crores where maintenance capex is required.
Okay.
And next year.
Hello?
Yes.
I think the management line has gone mute. Let me reconnect them.
Sure.
Please hold.
Sure.
Yes, we have the management back on the call. Please go ahead.
Yeah, sure, sir.
Yeah, can you guys hear us?
Yes, sir.
Okay. Sorry about that, I think.
No problem, sir. Yeah, so, sir, in terms of capex for FY19, given that if we touch the 2,500 crore order inflow, the upper limit, what kind of capex would we require, sir?
As Rohit said, about 25 to 30 crores.
Okay, fine, sir. Sorry, I missed that. And lastly, the subcontracting would be more of low value work, or it would be related to equipment which we don't really own?
Come again, we lost you in the first part of your question.
The subcontracting would be related to the value of work would be lower in value, or it would be a more margin accretive work?
No, as I said, the subcontracting would be about 15%, and this would be for highly specialized works.
Okay.
In a project, right? Which would be lifts, so which would be building management systems, more IT related, so on and so forth.
Okay, so which is not in our domain, but of civil construction.
Which would take on experienced subcontractors to execute for us.
Okay. All right, sir. Thanks a lot. That's it from my side.
Thank you.
Thank you very much. At this point, there are no further questions. Would you like to make any closing comments? Would the management like to make any closing comments?
No, it's fine. Thank you so much, everybody. And as for the results that we read out, we are on target to meet or exceed the guidance that we've given at the beginning of the year. And hope to all of you at the end of the financial year. Thank you.
Thank you, Mr. Shobhit, and thank you all the participants.